Okay. Want to really kind of kick this off by talking about what people are doing right now, okay? Part of this, don't get bitter, get better. So if you want to get better, let's understand what most people are doing right now. This is the ASX share ownership survey from 2008. The ASX do these every 2 years, and we're due for one this year, okay? And they survey literally thousands of investors just like yourself and ask them various questions about their investing. And the one that had the most impact on me was this one here. And it was basically asking where investors get their information to make their decisions on how they put their hard-earned money in the market. And those two words are really important for me, hard-earned. Did anybody, just on the way in this morning, just trip over a crack in the pavement and fall face first into a pile of money? Was that anybody? No. Or did you work bloody hard for your money? Is that what you did? I'm sure you did. So your money is important to you. We'd all like to have more of it, of course. We hate to have less of it. And therefore, we need to take it very seriously how we put that money at risk, don't we? Because when you make an investment, you take on risk, isn't it? Okay. I'm not sure if enough people take where they put their money seriously. And the reason I'm saying that is because of these results. 34% of people said, my primary influence for investing my hard-earned money comes from a financial professional. Now, I don't mind this concept, because really what you're saying here is that I don't know a lot about investing, so I need to find somebody who does. And I'm going to pay them a little bit of money for them to improve my returns. And as long as they improve my returns more than what I pay them, I've got a good deal, don't I? Makes a lot of sense. How have our financial professionals done for us over the last few years? Have they increased the value of our wealth? Or have they just ridden the whole roller coaster all the way down and then ridden the whole roller coaster all the way back up? Yeah. I think a lot of people out there who have these financial professionals, like a broker, a financial planner, or a financial advisor, have probably been paying them to lose money. I've got some news for you. You don't have to pay somebody to lose your money. You can do that yourself. So I don't think this is a bad concept, but I want you to be very, very, very vigorous in the way you scrutinise their performance. Now, should you judge the performance of these financial professionals by how they go in a rising market? Who makes money in a rising market? Everyone does. Should you judge the performance of these people in a falling market, like what we've got now? And if they're able to maintain and even grow your wealth in a falling market, as well as a rising market, I reckon then they're doing a good job. And if they're not doing that for you, I would suggest you could probably just do the same thing yourself, couldn't you? And save yourself the money. So I don't mind the concept, but I think we need to scrutinise them a whole lot more. Now, the next biggest place that people get their information from, and this was no surprise to me, was the media. That includes newspapers, TV, magazine. Almost 1 in 5 people said, yes, the decision to put my hard-earned money at risk in the market comes from a newspaper. That's very interesting for me. Now, when that financial review hits your doorstep, how old is the information in that paper? 24 hours, isn't it? Yeah. You can't even really call it news, can you, at that rate? It's information, but it's not new, is it? I'm getting a few blank looks in the room. Are we not sure about this? Newspapers, the information is how old? It's old, isn't it? Yeah, so we are sure about this. Good. Remember I said participate, let me know. I don't want to be just rabbiting on here and not knowing what you're thinking. So, what is the value in using information which was news yesterday? Is there any value in that? Well, you've got to remember that markets work pretty quickly these days, don't they? Yep. And any information in that newspaper is already embedded into the prices on the market. So if you're acting on that now, you've got no advantage. In fact, if you act on what you've read in the newspaper, you're actually helping the people who got in yesterday, isn't it? Yep. That's the first thing I'd say about newspapers. So the value of the information, I'm being quite serious here, is zero. There's no value in that information. The other problem with newspapers, of course, is they're written by journalists. Yeah, journalists. Now, journalists, well, do they like to just report the cold, hard facts? Or do maybe they just sex them up a little bit, sensationalise them? Why are they encouraged to do that? To sell newspapers. So we get excited and we want to buy that newspaper, we want to read why the world's coming to an end. or why the world's fantastic, isn't it? So newspapers, correct me if I'm wrong here, are designed to make us emotional. And we are emotional. We get emotional. Now, the point of this is, do we make good investing decisions when we are emotional? I want a big yes or no here. Do we? No, we don't. So there's two important points here about newspapers. Number one, the information is ancient history and of no value to you for that exact reason. Number two, they're designed to make you emotional, and you don't make good investment decisions when you're emotional. So it's not surprising for me that people do ride the roller coasters because of where they're getting the information from. Now, third one here, friend, family, colleague. I won't harp on about why that's quite crazy, isn't it? Now, I've embellished a little bit here. Make no mistake, the ASX survey did not have the milkman, the butcher, the candlestick maker. I've put that in there for effect, okay? And the taxi driver, isn't it? The most important source for stock tips. 13% people, now, they surveyed you. 13% of you said, that's where I get my information from. Final category, the largest category, was company reports. Now, this one really worries me the most, because when National Australia Bank produces its annual report, and it comes to you in the post, two things again: currency of it. How old is it? Very old already, isn't it? And what division within National Australia Bank produces that report? Does it come from accounts, or does it come from marketing? Isn't it? Sales, marketing, public relations. And certainly the information there is very glossy. And if there's anything bad, it's going to be buried somewhere where you wouldn't be able to find it anyway. In a font, probably so small you wouldn't be able to see it. Is that a fair comment, or am I just making stuff up here? I think that's pretty fair. So you really need to question the value of the top 4 responses of where you get your information from. And I would say if your money is important to you, and you didn't fall into a pile of it on the way here, you worked hard for it, and you want more of it, and you hate to see it go away unnecessarily, I think you need to do something a little bit different with your approach. Because if you do the same as most people, you're probably going to struggle to beat the markets. And that means that when the markets go up, we do okay, but we don't beat the markets. When the markets go down, we get wiped out. Okay? It's all about beating the markets. Well, if that's the wrong way, if those 4 steps that most people do are the wrong way, what's the right way? And that's what we're here to talk about today. Okay? Today is all about investing the right way.